morning, everybody. You are looking live at the morning show here on Stock Market TV. As always, welcome. Good morning, chat. Everyone here on Twitter, nice and early. We appreciate you, everyone. Today, we have a new guest on the show, John Kosar from Asbury Research. He's going to kind of walk us through. He's a technician, and he's going to walk us through how he looks at the markets through his charts. So that'll be at 9. Very excited for that. We'll have Mary, as always, at 9:30 to tell us what she's been trading. And we got the charts. We got some Steve's charts, JC's charts. We got some earnings. Oh my gosh, yesterday was a lesson and a half in merger arbitrage 101 and why that's not always so easy. We'll talk about that disaster of the day, and we'll take questions if we have time. But let's roll. Smash the like, please.
Now, good morning, everybody. Nice little Wednesday. It's very confusing what day of the week it is. Is anybody else really confused?
Not a fan of the Mondays.
We got Monday off. They switched what day the garbage comes to get picked up in my house. We got a conference call on a Thursday. No? Very confusing for me.
These short weeks, they mess everybody up.
I wake up, I have no idea what day it is. Is the market open today? Yeah. Very confusing. I'm excited to hang out with everybody next week. That's pretty cool.
Yep,
very excited.
We finalized our menu yesterday. Oh, and JC, late last night I sent you the wine list.
Oh, I got it. And I was going to do it, but this is something I need to take my time with.
Okay.
I'm picking out the wine for dinner Tuesday night. What do you think about that, Rachel? Rachel's coming, by the way. Did I tell you guys? Rachel's coming.
No.
Rachel's going to come hang out with us.
I assumed Rachel would be coming.
Yeah, you just assumed?
I just assumed.
Yeah, she's coming. She's gonna come hang out. We got quite the crew. Nice dinner. Barry Ritholtz coming through for dinner Tuesday night. Todd Sohn, Todd Gordon, as we discussed. Frank Kapp is a maybe. Dr. Phil Perlman coming through. I told him it was pretzels and hot dogs and pizza for dinner. And then he called me 2 days later. He's like, "Are you serious about the hot dogs and the pizza?" I'm like, Perlman, how long have you known me? You think that's what we're going to eat, bro? Come on.
Phil's going to be there all day, too. He's going to give a little presentation.
Swing by in the afternoon.
He's going to be there at 11 o'clock. Is anybody else giving a special presentation?
Yes, but there are surprises.
So, we call them mystery presentations.
There's so much of a surprise I don't even know about that. And I'm trying to make a damn schedule over here, and I have no freaking clue.
Yeah. No.
She just won't tell me.
No.
Dr. Perlman, zoom out on your life, bro.
We've got friends flying in from Dublin for this.
Oh boy.
Really? I'll leave it at that. All right. So happy Wednesday, everybody. What do you say we talk about the market? See what's going on, huh?
Let's do that.
We'll party next week. Markets today, party next week.
Agreed.
All right. So, by the way, all that partying next week, there's going to be a lot of charts as well. So Dow Futures down 140 points, about 40 basis points. S&P's down about 50 bips, 22 handles. NASDAQ Futures down 60 basis points, down 100 points. Bonds down again. Are you noticing how stocks and bonds continue to move together? Bonds are not acting as a safe haven. They haven't for a while. A lot of investors are having a hard time coming to terms with that. I'm going to keep pointing it out until that changes, and I don't see any evidence of it changing anytime soon. Gold flat, silver down almost 1%, copper down 40 bips, oil down over 2%, natural gas after getting hammered yesterday down another 40% on the day as the U.S. dollar is inching slightly higher here. The volatility index up towards 15.5 on the VIX as yields hover right around 4.1%. And finally, in the old funny money, Bitcoin down almost 500 points, down 1%, down towards 42,600. Ethereum hanging out down 1.5%, right around 25.50. And old Solana hanging out above 100, back above 100, up 4% on the day, as total crypto market cap sits around 1.64 trillion in assets. How do you feel about that morning rundown there, Strazza? Are you happy about it? Are you upset about it? Is it boring?
I think the cryptos are looking perky. Equity futures, good start to the day. And interest rates, really the last 2 days now, ticking higher, right? So probably going to keep putting pressure on risk assets. Dow is what? Down, what'd you say, 40 basis
I like how
points?
treasury bonds are a risk asset now. Have we, right?
I mean, I don't know about that. I don't know about all
Why don't you throw up slide 2? Since the S&P 500 peaked a few weeks ago, S&P's down, Q's down, Dow down, treasury bonds down a lot more. How do we feel about that?
Yeah, like you said, the relationship's been there for a while now, right?
Nowhere to hide.
What?
Yes. Well, I mean, there's not really much of a reason to hide too much. Why don't you pull up the new slide 3 here, where you can see Nvidia climbing up the leadership board of market capitalization, huh?
So
new all-time highs yesterday. Some risk-off environment, huh?
So yesterday, really red tape. Pretty much every sector was down on the day. The new highs list was not lonely though.
No.
45 stocks making new highs in the S&P 500 yesterday. You know, from Domino's Pizza to Nvidia to Microsoft, Eli Lilly, all of the usual suspects. You know, all of the best stocks from last year continue to be the ones that keep popping up on the new highs list now this year. A lot of big cap tech, a lot of just, you know, mega caps in general, and Domino's Pizza.
Nvidia, that's hilarious, by the way. Nvidia up at 1.4 trillion in market capitalization, just behind Amazon's 1.5 trillion. Nvidia catching up to Amazon. Nvidia well above Meta's market cap, which is right around 950 billion. And what did I say? A couple hundred million? 100 billion. Berkshire Hathaway, by the way, sitting around just under 800, and Tesla right around 700.
And it's not just Nvidia, right? AMD is catching up on market cap scale to the likes of Salesforce and Coca-Cola and Bank of America. AMD looks like it's heading back for those old highs.
Broadcom sitting around 520 billion, and AMD is where?
I'm seeing 450 for Broadcom.
AMD 260.
Yeah.
Broadcom, I've got 520.
I remember when AMD was like a penny stock. It was
Dude,
like $1.50.
2015. Oh
Dude,
my God.
I remember in my investment banking days, Broadcom 520 just confirmed. I remember in my investment banking days doing secondaries for Avgo all the time before it merged with Broadcom or Broadcom Bottom or whatever. These guys used to do secondaries. Like, we make fun of these pot stocks, you know, secondaries, and some of the Avgo was doing secondaries like once every couple of weeks for years. I remember participating in a lot of them back in the day. Is that interesting?
They were at a different, you know, phase of their life cycle. They needed the money then. They don't now.
They don't now.
Don't now.
Dude, but it was like a joke. These guys did so many secondaries. Crazy. And we participated in like a lot of them.
But I think that's an important lesson, right? Now you could argue this stock is a cash cow with a fortress balance sheet. But what, 15 years ago, they're doing secondaries left and right?
I do want to point out, who said it? I want to give the credit where credit is due. One hole, just talking about Microsoft passing Apple. Great call. Microsoft now at 2.9 trillion, with Apple at a measly 2.839 trillion.
You saw that coming.
Might as well be a penny stock.
You know, the short-term trends were heading in opposite directions.
Yeah, you saw it in October. You know, a lot of stocks were down in October. Microsoft was up 7.5%. Yep. Like, I remember saying, Microsoft was up 7.5% this month. You know, that was in October. You saw it then. Why don't we go down the cap scale? I I think something that gets forgotten a lot about is the strength that we've seen in small cap stocks, because I think a lot of people are focused on the Russell 2000.
Not lately.
Fine, whatever. What, in the last few weeks is what you're
No,
saying?
just this past week. I was really disappointed in the minor leaguers. We had one setup.
Dude, these things have been ripping. Let them dance. Small cap industrials off the lows are up 42%. Small cap discretionaries up 37%. Both outperforming the S&P 500. I mean, there is strength underneath the surface. Monster move. It has nothing to do with the fourth quarter. These stocks were already ripping well before any rallies in November and December. The Russell 2000 caught up because regional banks and biotech started to catch a bid, but there were already huge winners underneath the surface. They're continuing to be. We just dropped this last night. ASC Premium subscribers obviously go and check out the latest trades. Our conference call's tomorrow, by the way. Are you stoked, Spencer? Are you going to be there?
Of course.
Spencer's like there sometimes. He's one of these like post live show watchers.
Look at this list.
Sometimes I do watch them after the fact. So what?
So we talk about this, how our bottoms up scans are the greatest compliment to our top down approach to markets, right? We've been on here over the past few weeks talking about strength in asset managers. JC did a whole bit at the top of yesterday's show talking about oil and gas, midstream, and the refiners. And then when we run our bottoms up scans, it reinforces or confirms what we're seeing, you know, with our top down analysis. We see all these asset managers just littered on down this list. We see all these midstream operators all over this list. And then we say, okay, that's the market internals confirming what we're seeing when we look at the sectors and the industry groups. No?
Can you go to the next chart there? The new next one, new slide 4. I think that we should do a minor leaguers, but do like a 4 to 10 or 4 to 15, Strazza.
Yeah.
So our minor leaguers, our small cap scan is 1 to 4 billion. Traditionally, small cap stocks are between 300 million and 2 billion. We want to expand it. If you're not worth $1 billion, you know, you're kind of useless. So, and 4 billion, that 1 to 4 seems like a good sweet spot. Here we're looking at an Indian travel services company breaking out of a monster base to new all-time highs. Not a minor leaguer, but would certainly come up in that next level. What do you think, Fonz? You think, what do you think? You think we do like a 4 to 10 or 4 to 15? How do you feel about that, Strazza?
I would open it up to 15.
You don't think that's going to be too much of a universe?
No.
There's just not a lot of stocks that are between 10 and 15 billion anyway. Right? Fonz likes the 4 to to All right, so minor league. So what are we going to call them? Are we going to call them the AAA organization? It's kind of like the purgatory. Like you're not quite the minor leaguer, but you're not a big leaguer.
Now we're getting a little bit too obscure with the minor leagues. There's a
We
better
can do
name
better
out
than
there.
that.
There's a better name out there.
There's a better name out there? All right, we'll think about it. All right, so throw up the MMYT. You know, I mean, this thing has been a leader. India has been a leader. Consumer discretionary has been a leader. This particular part of the cap scale has been a leader. A lot of winners coming from this size market cap. It's like check, right?
We've been watching this one for so long. This is like Pindow. It's just one that's been working in a universe where we don't have the best opportunities right now. And I know India looks good at the index level, but beneath the surface, there aren't many that look this good.
There aren't many American stocks that look this good. Can you punch up the new slide 6, the new one here? That's a great chart here. This was shared by, who was this who shared this? This was Jay Capel over at Sentiment Trader, talking about IPO activity. Considering how well stocks have done over the last 18 months, you'd think there'd be more IPOs, no?
Well, the window, I mean, it's a little bit of I guess not that narrow. I mean, the market was frozen. The IPO market was frozen until last spring? So we're talking about April to today.
Still not good.
Not the largest window of time to get.
But isn't it good that the animal spirits still haven't come out, and all this shit being pumped into the market because they can?
Yeah, it's coming, and it's going to have a lot to do with interest rates.
Why?
The lower rates are, the more likely these companies are to come public, because they'll be able to come public at higher valuations, right, and cash out at a more lucrative amount.
Yeah,
it becomes more and more appealing, that idea, to founders and operators.
That's interesting. Are you surprised? Yeah, Jay would be a good guess. Get him on, Spencer. Yeah, that's a good call, Joel.
We just got to read on this with some of the big banks, right? The capital markets activity, their underwriting activity, their M&A.
What did they say?
No good, really, across the board.
There's nothing happening.
I was really surprised at that.
It's quiet out there. It's quiet.
Yeah, still
So
very
it's quiet in terms of companies raising money, quiet in terms of M&A, quiet in terms of S1s.
I think we'll see it though this next quarter, because it's been happening. We come on here and we talk about, look at another deal in the oil and gas patch. Look, another deal in biotech, right? It's slowly starting. Just hasn't kind of flowed through to their books yet.
You think we're seeing more of these M&A deals now than we did maybe a year ago?
Definitely.
Yeah.
Yeah, but as to Steve's point, so far it's been confined to a handful of industry groups, right? Mostly just biotech and oil and gas. Haven't seen two, and I mean we had a big one yesterday get caught off, right? So I don't know. I want to see it spread to more industry groups before I really,
Nicholas is talking about how layoffs are happening, so that's good, right?
A lot of layoffs. The banks, you're seeing in financials, and you continue to see it in tech. There was just a big one. Was it Google? In their ad business, right?
Yeah. Well, and they're like they're moving or shutting down. I think moving their AI group out of San Diego or something. I don't know.
I have to wonder, with headlines like this, right? These tech companies kind of right-sized themselves last year, went through round after round of layoffs, all of them. What are they still laying off for? Can we blame AI for these new rounds of layoffs?
I don't know, man. I mean, layoffs are great, right?
Man,
Keep them coming. Doesn't the stock market likes it?
They hired so freaking much in 2020 and 2021 that it probably just takes a few rounds to get the number right a little bit,
Isn't unemployment just still too low anyway?
It is low. Yeah, it is low.
And isn't that an inflationary concern? Unemployment too low?
They tend to go together.
On paper, yeah.
All right, so lay more of them off. Let's go.
In theory, sure.
Aren't there like 2 jobs available for every one person looking for a job? Like, that's not good. Right?
Yeah.
I mean, I'm no economist, but
the labor market is really changing, right? So it's hard for us to sit here and say this is the right place for it to be. A lot of changes.
All right. I am, for the record, surprised that there aren't more IPOs, considering just how well the market is doing. And for somebody who listens to conference calls, like Strazza likes to do, you're hearing the same thing behind the scenes, essentially.
Yeah.
But not just IPOs, just business in general.
Yep.
Yeah, that's interesting.
Look,
surprising.
You got to look at the performance of the big ones we got last year. We got Instacart. It has not looked good. Right, ARM has done okay. ARM looks.
Is that a function of the market, or just these things are just terrible companies?
What's the difference?
I mean, I think there's a difference. Strazza, no?
I didn't hear what Spencer said. There's a lawnmower outside.
I said, what's the difference between whether it's a crappy company or a function of the market? Right.
I think that's a big difference. No.
No, because the market will allow the crappy companies to get through. If the IPO market has thawed, if it warms up a little bit,
if they're accepting these shitty companies and sending them much higher after IPO, the animal spirits are probably a little out of control in that environment.
Yeah. Oh yeah, sure.
So maybe the fact that the animal spirits are somewhat muted is more early stage cycle stuff than late stage cycle stuff, when the biggest piece of shit company can go public and then rip.
Point is, this is bullish.
The point is, we don't know how bullish it is, but it's not bearish. Right? Is that right?
Yeah. You probably don't go back to a place. The IPO like just onslaught of IPOs that we saw in 20 and 21. We probably don't go back there. Would be nice to see this red line.
Maybe not for decades.
Right. It's going to be a long time. We'll see. We'll see.
Okay. Well, I am. I like what you said before about how the market, in yesterday's tape was the new highs list was non-existent. Number one. I thought the consumer staples underperforming in yesterday's tape was interesting. Still not getting any strength at all in consumer staples. Nothing. Check them this morning. Is there any liquidity in these things? They're down a little bit. Even in yesterday's tape, consumer staples underperforming. No? Underperforming S&Ps, underperforming consumer discretionary. On an equally weighted basis, even more so? No? Nobody cares? Strazza?
No, I mean...
You don't care? It's not a big deal? Yesterday. You're not entertained?
I think we've covered it.
Covered what?
We discussed this yesterday, right? I mean...
How could we discuss it yesterday? The market wasn't open yesterday.
What?
Yeah, when we did our show.
This short week's got you fucked up.
What are you talking about?
The market was open yesterday.
I know, but not when we were doing the show and having this conversation.
Oh, okay. All right.
I'm just talking about after the fact. I'm looking at the market and I'm saying in this tape, staples are still underperforming. They're underperforming discretionaries, and they're underperforming discretionaries on an equally weighted basis by even more.
Listen, I want to see the groups that really ripped off of those October lows start working again. I want to see speculative tech working. I want to see the metals and mining stuff working again. I want to see biotechs and banks working again. I want to see small caps break out of this range again. Is that stuff probably happening in an environment where XLP SPY ratio is breaking to new lows? Totally. So I think from a risk appetite perspective, yeah, we don't have that defensive bid, right, for staples, but we also don't have like some big offensive bid. Like I just explained, the new highs list yesterday, all these repeat offenders, all the big caps, all the leaders. We want to see that broadening of participation off the October lows that we experienced, which stopped a few weeks ago, come back. But yes, bullish development that at least they're not out here playing defense. But I need more. This is
they're
like
not playing. They're not playing defense
right now. So it's a defensive battle. It's probably snowing. Probably somewhere in like Pittsburgh Ravens, circa 2005. It's 7-3 in the third quarter. Put some points on the board. Biotechs.
I'm very confused with your analogy. Tell me again about the Pittsburgh Ravens.
I also was not following that.
What happened with the Pittsburgh Ravens?
Those games they used to play, there would be 10 total points.
Yeah, okay.
Back in the Rex Ryan days, it was just running the ball. Nobody could score touchdowns. Great defenses. Just forget it.
Okay. Do we want to do some? We'll have our guest on in a couple of minutes here. You want to do some earnings, or what? Let's talk about this merger disaster.
What happened
yesterday?
We have a communist running the FTC right now. Can't wait for her to be gone.
Let's
talk about no deals.
Let's talk about this.
Are we really hating on the FTC right now? Who's the FTC again? Who's the FTC?
Look up this con character. She doesn't believe in business deals. She doesn't believe in capitalism. Frankly.
Wow.
No deals.
Wow.
That's her stance.
See it.
No.
All right, Spirit Airlines JetBlue. If you recall, JetBlue was battling with was it Frontier just for the right to win this Spirit merger in the first place. And yesterday comes through that, oh, no, merger blocked, not going to happen, competition concerns. So yesterday was such a bad day for Spirit Airlines that the stock fell below its COVID lows on an intraday basis, below its COVID low. I think at the low it was down 50% yesterday. I think it closed around down 45%, somewhere in that neighborhood. There we go. Look at that. Below its COVID low. That's a meaningful number, I think. Anyway, this is a great lesson in merger arbitrage. Oh, how come company X is getting acquired for $10 but trading at $9.50? Because this can happen to you. So, absolute disaster. And keep an eye.
Why should anybody care about this terrible company that who even knew still existed? Like, this is a less than $1 billion company. Like, why? Explain to me why this matters.
Oh, now it is.
Okay, fine. So it was 1.4 billion before. Whatever. Why does this matter? This thing's been going straight down for the last 10 years. This thing's down 90-something%.
And I would love to watch this one be a zero. If you've ever flown Spirit, you probably agree. It looks to me as though they need
Spirit.
It's happened. Looks to me as though they need to be saved.
Oh, stop.
That's good.
Oh,
That's good. Oh,
you're not even a dad.
Wait
You're not
a
even
minute.
a dad. Like, are you even allowed to say such things?
But seriously, we let Microsoft buy Activision. These big tech companies, they could buy whoever they want, no problem, right? And then these businesses that literally are not even getting by. Look at the stock price. This thing's got zero written all over it. Going concern at this point. They need to merge, right, to be more powerful together. If they did merge, they would have been the 5th largest airline, right? We're not talking about like the biggest airline in the world or anything.
Aren't there only 5 airlines?
Yeah, well, that's at issue in the case, right?
Is this the denominator fallacy?
Listen, they're all in bed with each other.
5th largest airline. How many airlines are there? 5.
They all work together anyway. The airlines, like they're sharing seats and stuff. It's amazing what they do. The problem here is that these companies need to merge. This industry needs to merge, right, and consolidate to become more powerful. To block a merger like this, I just don't understand. This deal goes through a year from now when this lady's out of the FTC. There's no reason. Ridiculous.
I can't think of anything I care less about. Can we talk about the? We'll bring in John now in 1 second. Last chart, slide 2 here. I want to talk about the performance of the sectors.
50% moves don't interest you in one day? That's not interesting?
If it was an actual company, then yes. This is Spirit Airlines, bro. Like, who cares?
And they're like looking out for the consumer, right? This is like
when all these little banks like Silvergate and Signature Bank and First Republic and no one's ever heard of, like when they disappeared, like who cared? Like they made a big deal out of nothing. Remember, it was like a banking crisis. Financials were the best performing stocks in the second half of last year. Banking crisis.
Spirit Airlines, I believe, the only American airline company not to file for bankruptcy.
Well, not yet.
They weren't around.
Yeah.
Okay. Yeah. I didn't say why.
Give them some time. They'll be filing for plenty of them. So here are, since the new 52-week highs list peaked a month ago, a little bit over a month ago, this is the performance during this correction. Healthcare, I suppose has a defensive tilt. I don't know how defensive healthcare really is. It looks like more rotation to me. Communication Strazza is certainly not defensive in my opinion, right? A lot of Google and Meta. Are Google and Meta safe havens?
Show me the equal weights. It's 2 stocks in communications.
All right, 2 big ones. We live in a cap-weighted world. Technology outperforming as well. Financials outperforming as well. Just an interesting dynamic. Consumer discretionary struggling. Industrials, materials, energy struggling during this period. But I think it's important to see the sector rotation happening underneath the surface while the market's been correcting since the new highs list peaked. No,
it is. It's good. Who's the laggard here?
Energy.
And then discretionary, but that's Tesla, right? If you did it on an equal weight basis, that would look different. Tesla's been super, super weak.
Okay, and Amazon. What do you mean?
Amazon has not been weak. Tesla's driving.
No, fine, but Amazon is the big component there.
Tesla's very close. Close second. Doesn't matter. I'm not.
You want to look at it on an equally weighted basis?
A fact check.
Let's do that after I bring John on.
Quick. I got it ready.
Quick.
I got it ready.
Okay, he's got it ready.
We'll bring in John. I want to hear John's thoughts on some of this rotation.
I bet you do.
All right, so here's on an equally weighted basis. Healthcare leading again. Staples, similar story, really. It's actually the same story. Communications a little bit down that list, but pretty much exactly the same. Right?
Yeah, you see communications a little bit lower. Yeah, discretionary still bad.
Yeah.
Just interesting because a lot of these, whether it's restaurants or home builders, and we're talking about Domino's Pizza being on the new highs list, there's a lot of stuff working.
I love, first of all, the fact that you brought up Domino's Pizza twice already.
I have a new. I
had to send the chart to Batnick. I got excited for him.
I know, but like, there's no. It's irrelevant. It is not. It's an irrelevant company. It's $14 billion. It doesn't matter.
Hey, all I'm saying, there's a time and a place for Domino's.
Who eats Domino's Pizza? Like, what kind of serial killer is going to sit there and eat that? Oh.
Look, sometimes you don't want real pizza. You want crappy.
No, that's not true.
That is not true.
That is not.
Yeah,
forget. I'm not.
Strazza, you want to smack him? Smack him.
I don't want to get into this. I'm bringing in John.
Yeah,
John
bad
Kosar,
take. Bad take. Sometimes you don't want good pizza.
Strategist of Asbury Research, new guest on the show today. Everyone, be nice in the chat. Let's go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, John, what's going on?
Hey, John.
Hey, guys, how you doing? I was enjoying your conversation about pizza.
Can you hear his take, John? That sometimes you don't want good pizza? Like, what is that all about?
There's not a time like that. There isn't time for bad pizza.
You're from Johnny. You're from Illinois, right?
I am from Illinois, Chicago. We have a lot of pizza here.
All right. Yeah. More of a tomato pie, right? But still good. Still good. Nothing wrong with that.
Yeah, there's different varieties.
Yeah.
The pie is good at times.
Sure.
I'm gonna confess that I actually kind of like that Detroit style. I'm not gonna lie. I'm into it. I'm into it a little. I don't say that kind of stuff out loud too often, but I'm into it.
Well, variety, right? Variety's the spice of life, right? It's good to have a little change in your pizza diet now and then, I think.
Just don't eat Domino's.
That'll kill you. Except for Domino's.
Yeah, that'll kill you.
All right.
John, speaking of kind of, mixing things up, we've been seeing some sector rotation. As someone who follows the market over many years like yourself, sector rotation is something you've seen plenty of over the years. What do you make of this current environment and the rotation we've been seeing?
Well, I built a model for this, and it measures the velocity of money moving around the 11 sector spiders. So rather than waiting for the charts to change, right, because you're seeing the relative outperformance or underperformance, this is catching it a little bit earlier. This is measuring the money that is moving around the 11 sector spiders. And what I've noticed...
Sorry, John. It's measuring the money what? I'm sorry?
The velocity of money moving in or moving out of those 11. This is the Asbury 6. This is something else. I should have, if you guys give me it again, I'll show you that next time. But basically what it does is it tells me in 3 time frames where the money is moving into and how fast, and where the money is moving out of and how fast.
Are you using the ETFs or the individual components in those sectors?
No, the ETFs.
Got it.
We're using the AUM in the individual ETFs.
Got it.
And measuring just kind of how it's kind of like a Monopoly game, right? How that is all the money in Park Place, is it at Illinois Avenue or whatever. And what that's showing me right now is you're getting a lot of furious rotation of that money right up at the top. So technology, real estate, communication services, financials, and a little bit of healthcare swirling around for the last 6 weeks. That's not normal. You normally get money that goes in those sectors, stays a while, generally speaking. You got this really frenetic movement. Down at the bottom, everything's the same. We got staples, energy, we have industrials, right? So that's where the money is coming from, hypothetically, to go to these other places. But what I see this churn up at the top is the market's trying to figure out what to do here, right? We're just underneath these all-time highs in the S&P, in the NDX, and the market's trying to figure out whether it wants to be in the resources like tech. We saw a lot of money push into tech last week, or if it wants to be in financials or healthcare, and it hasn't figured that out yet. So I look at it, it makes it difficult to trade, but it sends me a message that this is probably a big inflection point for the market, because the market is jumping from sector to sector because it doesn't know what to do here.
What do you make of the lack of rotation into staples and just that lack of defensive bid out of that group, especially yesterday's tape? Staples underperforming discretionaries as well. Am I overthinking it, or are you also surprised by the lack of rotation into staples?
I am. I don't. You know what? Sometimes I just resign myself to following the money and not being able to figure out the story behind it. And this is kind of one of those things. I don't know. Staples has been ranked in the bottom 3 for my model. It's called SEAF, Sector ETF Asset Flows. It's been kind of languishing down at the bottom here for bottom of the pack, let's call it, for months. You would think if there was some kind of a topping process going on here, you might see that raise up in the rankings a little bit. It just has not done that. So, we've been avoiding that sector like the plague, because that's where the money leaving to go to other places as it kind of rotates around those 11 sectors.
John, can you shared a couple of charts with us. I want to maybe we can bring up slide. Let's go 3. Let's go slide 3 here, and just maybe you can explain sort of what you're thinking here.
This is one of about 8 or 10 different tactical tools that I look at every day to try to determine what the under the hood condition of the market is. And this is cumulative volume index. There's a lot of different ways to do, there's on balance volume. There's a lot of different ways to look at that type of volume. But this particular metric, it rose above its 21-day moving average. That's our tactical time period here is 21 days, right? So we're trying, tactically, we're 21 days. Strategically, we're a quarter or further out than that. So basically 21 and 63 days are tactical and strategic for us.
Sounds familiar.
It works for me. I've been using it for a long, long time.
Yeah, us too.
Yeah, it's a big deal. Just as a side note, you can get any indicator to tell you whatever you want at any time of the day or night. If you don't know what your time frame is, you need to kind of partition these things. These are tactical. We look at them through this lens. These are strategic, that lens. So what all this is showing us is that the volume started to increase here beginning of November, and really was held that trend like a rock up until 2 or 3 days ago. Now it's starting to lose its mojo.
Can you explain what the New York Stock Exchange cumulative volume index is? I know that last time I studied for a test, 20 years ago or so for the CMT, it rings a bell somewhere in my studies, but it's not something I follow on a daily basis. And I'm sure on the chat, this will be new to some of them. Can you walk us through what exactly this is measuring?
Sure. This cumulative volume, unlike raw volume, when the market is up for the day, whatever the volume is added to that cumulative total. And if it's down for the day, whatever that volume is subtracted from the total. It's a lot easier to see than the raw volume, which often looks like a guy having a heart attack. It's very hard to
and this is volume on the New York Stock Exchange, and it's measuring the New York Stock Exchange composite.
Yes, this is using a composite.
Got it. I was watching a documentary last night, filmed in 1998, about the Dow Jones Industrial Average, and I forgot the guy, and he's like, you walk around and you ask people what the New York Stock Exchange composite did today, nobody even knows what that is, but they know what the Dow is.
It's so true. I mean, even now.
Still true. Thank you, John. Tell these kids, the kids these days.
You know what? I didn't say I pay a lot of attention to it, but it is for people that don't follow this every day like we do. It's like, oh, you mean the Dow. I think the Dow has value as a relative performer. If it's outperforming the S&P 500, the way that I look at them, the Dow is the burrow. That's the one you want to be on the mountain side when it's getting slippery, right? And then the NASDAQs are the racehorses. So if you see the Dow outperforming the S&P 500, and we've been seeing little fits and starts of this now for about a month or so. Dow has a couple good days, it gives it back. To me, that's managers starting to tweak their portfolios a little bit. So if we do go into some kind of a corrective phase here, we're on the burrow and we're not on the NASDAQs. We're not on the
also, it's a sector rotation thing, right? So the Dow's got a fraction of the tech exposure that the NASDAQ has, right? A lot smaller than the S&P. There's industrials are a huge portion of the Dow. There's no industrials in the NASDAQ. There's half the industrials in the S&P. So for me, it's a sector rotation thing. It's what types of stocks are working in this environment, right?
Exactly. That's exactly it. You basically said what I said a little differently, but it's where does the money feel the most comfortable in this particular environment? And when we're in an environment like we were in the past couple of months, it's a feeding frenzy, right? So everybody wants to be on the faster horses. As concerns come in, the Fed's going to start to change their policy. There's going to be some Fed movement. People kind of go into the turtle a little bit. You can tell by those movements kind of what the market's feeling oftentimes before the S&P moves. I think that's often sector rotation for me, and I'm sure you've seen this, is typically a leading indication of where the overall market's going over time.
How about market cap rotation, John? We heard a lot about rotation into small caps coming into the new year. What are you seeing when you look at large versus small?
Boy, those have been pretty choppy. Right now, I was actually just looking at these before I came on the show today. And when I look at sector rotation, I try to keep it big picture for the most part. So what I'll do is I'll look at like small, medium, large versus, I use ETFs. So I'll look at SPLG, as the mid cap version of that and the small cap version of that, and look at those versus the S&P 1500. So we're looking at large cap now versus the 1500, which is SPTM, Susan Paul, Thomas Michael. And it's been underperforming on a quarterly basis since 11/30, underperformed by it underperformed to right before Christmas. Now it's starting to outperform again. If it continues to outperform from here, it's breaking that 63-day trend, and now large cap is back in charge. And to me, in that environment, watching large cap start to outperform again would be what you might see if we go into a correction this quarter.
So you're looking at basically a ratio, say SPLG over SPSM?
We're looking at SPLG over SPTM.
So over the total, that's total market then?
Right. So I'm looking at the 4, the 5, and the 6 versus the 15, which is all of those combined.
Yep.
Can we talk about this Asbury 6? Because I really like the ring. It has a nice ring to it. I really like that.
Sounds like a good rock and roll band.
Is it going to live up to the hype, or is it going to underwhelm us? Because now it's all with a name like that.
Is this
like the Jackson 5 or better?
It's better. It's like the Jackson 5, but much better dancers. Yeah.
You look like a good dancer, John.
Yeah, maybe back in the day. So the Asbury 6.
Throw it up, Spence. Yeah.
This is a internal tool that turned into a model for us. 5-6 years ago, I don't remember when it started, but the S&P doesn't trade like it did a decade ago. And I've been around for a long time. You get these days where we're up 50 today, we're down 40 tomorrow, we're down 30 the next day. It's really hard sometimes to not get thrown off of a good idea because of the day-to-day volatility that you're seeing. So I started back testing different tactical tools that I've found useful throughout my career, putting them together as a team. So they're all different. You can see we've got rate of change here in the S&P. We have relative performance between stocks and junk bonds, volatility, volume, and so on. I put these together. So if the S&P is down 50 one day and I'm starting to question whether I want to be long, after the bell rings and I get the final numbers, I can go take a look at this and see what, in my view, is the underneath condition, the under the hood condition of the market. So right now, 4 or 5 of the 6 are red. What does that mean? That means on a tactical basis, 5 of these 6 metrics are weak. So the market's vulnerable to having a deeper move down from here. The last time this turned positive, 4 or more of these constituents were positive, 4 or more green would be positive, was on November the 2nd. This turned negative 2 days ago. Yeah. So that doesn't tell me what's going to happen tomorrow. Nobody knows that. But it does tell me that the market is starting to lose the internal. We looked at one of these. We looked at the trading volume, right? So there's 5 other ones. When these start to get weak, that tells me that regardless of what I might see on that screen that day, that might be crazy, I have to start looking at the market differently. Maybe looking over my portfolio to see what I've got a huge lead in and what I may want to ring the cash register on, or however you trade. But this is giving me, in my view, a much better idea of what the real internal health of the market is. We've back tested this going back 6 years, and we incrementally tested it, right? So we started with $100,000 portfolio, and each of the 6 was 1/6 of that portfolio. So if you're 3 green, you're $50,000 invested. If you're 4 green, you're $66,000 or $67,000 invested. Back tested this. Basically, it's stuck to the S&P 500 like glue, but with a maximum drawdown of 14% instead of 34% for the S&P. So it allows us to play the game with a little less risk. Why? I think because these indicators keep you from getting head faked. Sometimes the way the market moves, it's very easy to get knocked out of a good idea. So that's the purpose of this. It's updated every day at our research center, and it tells me, again, I kept it internal for a while, and I was like, hey, newsflash, I'll bet you a lot of our customers are going to want to see this. And that's what that is.
You know what I really like about this, John, is that what you're doing is that you are identifying the type of market environment we're in. You're trying to understand the regime that we're in so that it can help influence the types of decisions that you're making in the market. You're identifying that market first. I have a lot of respect for that. Most investors don't do that.
And it's fast twitch. So that's, some people like that, some don't. It was made to be twitchy. I want to know what's going on under the hood of the market every day. Something else I found that's interesting. I said it turned green or it turned positive on November the 2nd. There was a couple of periods between then and now where all 6 were green. Mm-hmm. Then it turned to 3 and 3, right? So 3 were red and 3 were green. So that tells me internally the market's in balance. What I'll do at those points is I'll look at the chart that I'm trading. Let's say it's the S&P 500. Yeah. And oftentimes when it goes 3-3 and it's in balance, you've backed up to some kind of a minor support level. So if you can identify that on the chart and make the linkage between what we're seeing on the A6 and on the chart, that gives you a place to lean on if you want to add your long position. That's been another kind of ancillary thing that I found that this has a lot of value for.
I love this. What are you using to measure the NYSE market breadth? Curious.
The NYSE, it's the AD line.
Yep. So what makes it green? If it's making new highs, how are you?
21 day?
21 days. It's got to be higher than its 21-day moving average, just like the chart that I showed you with volume.
Got it.
I like that. I noticed when you were talking about, what did the market do today? You pointed very high. Like, how many monitors do you have? You were like, when the market does today, like you pointed, like if you had like, how many monitors are we working with?
Nothing excessive. Nothing excessive. I mean, I've seen a lot more fancy
You were like, oh, when the market did today. It's like, excuse me.
Yeah, right above my head, I've got a television, right? And I have Bloomberg on all day. And the reason that I do that is I started my career on the floor of the Chicago Mercantile Exchange in 1980 as a runner. And I stayed there 17 years until I saw the Titanic was rocking a little bit, right? That's when we were starting to move into electronic trading was just starting. And I was in my 40s. I didn't want to knock heads with the young guys anymore after being there for 20 years. So, but I was used to that noise in my ear. You spend that much time on the floor, and even though you don't think you're listening to it, that roar kind of tells you things. So to me, having that buzz in my ear is really important. So I just have Bloomberg on all day long.
And why do you choose Bloomberg out of curiosity?
It's less showbiz, I think, in some aspects. And a little bit more, I don't know, I guess it's a little bit more sedate. It's a little less fireworks and a little bit more, I want to say this in a way that I don't disparage any network. I've been on all of them just like you have, and they all have their own personalities. This one's a little bit more subtle, and I like that.
I think it's drier, which is not a bad thing. It's not a bad thing.
News.
Right.
Yeah,
It's drier. John, do you have like a safer work like floor story from back in the day?
I would love to hear one.
Like a funny floor story.
And whether it's not safe for work, that's okay too.
Well, all right. Well, I mean,
I don't know if it's a funny floor story, but I've got a floor story. I don't remember when it was. It could have been during the crash. I was on the floor in '87. I don't remember what. I think it was during the crash, and the S&P pit was the largest pit at the CME, and I was in a booth at that time. I basically did every job over there possible, I think, except being a reporter for the exchange. I think I did everything else. But at this particular time, I was in the booth, and I had a trader on my ear, and there was a guy up to the left of me. The guys that traded more business had better purchase, right? So they had better angles to see down into the pit. And somebody bought. There was an order that they were trying to put in to buy 100 S&Ps, and I think they bought 1,000. And they didn't discover it until, the market was dropping like a rock. So they didn't discover this until later. And they, again, this is a long time ago. This is kind of the rough details of what happened. But they had a couple of security guards actually come and escort this poor guy off the floor. And it was just a mistake, and instead of 100, he did 1,000. And in the heat of the moment, it's so easy to make a mistake like that. And then I remember after, this is right around the crash time. I remember, I don't know, I stayed late. I had to have some paperwork done, or I was just sitting at my desk and chilling out. I mean, those days you leave the floor soaking wet, because it was just so physical and so spooky. You're afraid to make a mistake that would cost millions of dollars. And I remember walking out and seeing some guy, I never saw his face, but he was sitting on the top steps of the pit all by himself, head in his hands, and his shoulders were moving up and down. He was
wiped out.
Who knows what happened to him, but just this lone guy sitting there. So yeah, I mean, there's a lot of fun times there. In the cattle pit this one time, I don't know, there were some crazy guys. I started in the cattle pit, right? I started down, I used to weightlift with a guy that got me a job down there as a runner. He said, if you could hold your place in the pit back in those days and you could do math in your head, you can do well here. So I went down there. I'm standing in the cattle pit. I don't really know anything. And one of the traders in there had one of those little army guns, where you shoot the gun up in the air and the little man pops out and there's a parachute.
Okay.
Well, he shot one of those things up in the air, and I think that, I don't know, it's a $5,000 or $10,000 fine, whatever. He just did it just for, there was so much money sloshing around there. He knew he was going to get fined, but it was worth whatever, 10 grand to make his buddies in the pit laugh. So yeah, a lot of stories like that.
Man.
How many drinks do you think you've had at Ceres over the years?
Well, not so many at Series. I was at the Merc, right? So we had a place
Not far, right?
at the Merc. We had the Iron Horse. There was a place called the Iron Horse. It was down in Union Station, right on top of Union Station, the
Sure.
Marsh McClellan building. That was the Merc that I started at. So the Iron Horse was where we went. I spent.
It's not there anymore.
I don't think so. I think Iron Horse is long gone. But man, there was there was a lot of after work partying going on.
And after work is early in the day. Correct me if I'm wrong.
Generally, well, yeah, especially for the guys in the cattle pit, right? You know,
That's what I'm saying.
I think we were done at 1:30, 1:45, and so
that can be dangerous.
Yeah, it often was. It often was.
Sounds about right. Just a little after work cocktail at 1:30. No big deal.
It was a funny group of guys. It was really, that was back in the days in the 80s. We had guys there that were cabbies, that somebody knew somebody had a cousin or an uncle, and they started as runners. They worked hard. Somebody liked them. They could do math in their head, whatever skills.
The New York Stock Exchange floor guys were very similar as well.
Yeah, there was a lot of athletes. I know you were an athlete. A lot of athletes there. I
was a pitcher. Athlete's a strong word.
Yeah, my son was a pitcher, actually. Also, he works with me. He's my partner now. But I remember, like, there would always be a couple of Chicago Bears in the summertime that would be working in the pit. There was a boxer named James Tillis back in the 80s. He was a heavyweight contender. He was down there for a while.
That's cool.
Yeah, it was very for a kid from the suburbs that really didn't see much of the didn't see really much outside of his little town. It was an education in many ways.
I was going to say, you're getting a PhD in how the world works.
Sure, and meeting people that you've never worked with before, every color, every creed, everything that you could imagine, and just learning what the world's like. It was just the best experience.
Cool. The market doesn't care about what race you are, or ethnicity, or sex, or age. The market's going to take your money if it wants to, no matter what.
Absolutely, it's very Darwin-esque down there, and I like that. And I like it because it's real. It's true. There's no, there's no lies. It's just, this is the market, and you either did well or you didn't. And it's a unique experience that unfortunately is not there anymore. For somebody just to be able to walk on the floor as a kid and to learn a trade. So that's going on.
There's new ways. There's new ways that are developing for that. So don't worry about that, John. All right, market's open. Let them race. Yep. John, thank you for being here. Appreciate that.
We'll let you go.
Thanks,
that was a lot of fun. Thanks.
I like the stories.
Great to talk to you guys.
Adios.
Okay, bye-bye.
All right. 9:30. 1 second. My computer's being a little bit slow.
Okay. I've had good times in Chicago, man. You know, Strazza's never been to Chicago?
Never.
I didn't. I knew that. It's a great city.
Great town.
Maybe wouldn't go between the months of, October and March, but great town.
When was I there?
Like October.
I was there in October. It was fine. It was nice.
Yeah.
It was lovely.
All right. November.
You were not at CME. You were at SIBO?
I was at this Board of Trade. Yeah. I was at CBOT.
CBOT.
Yes. But I was at the SIBO a few years ago. There's it's all empty pits everywhere, and like an S&P pit and like a VIX pit, and like that's it. But like there's all the empty ones are still there.
It's cool about the athletes being there in the summer.
Well,
isn't that how
Nigerian?
Isn't that how Nigerian got there? Didn't he play for the Vikings?
Yeah.
John's
one of them played for the Vikings.
Pete played for the Kansas City and Tampa, I think.
Oh, okay.
And then John, as he claims, had a cup of coffee with the Bears.
Okay.
As he says. I think he got, I don't know. I think he got released like after one of the preseason games or something like that.
Got it.
Yeah. We got to have John on. We'll have John on, tell some stories from back in the day.
Yeah. Yeah, we haven't had him on.
Well, let's talk some individual stocks here. Let's talk Charles Schwab. Earnings out this morning. EPS beat 68 cents for 64 cents. Sales, very slight miss on the sales number. Client assets up to $8.5 trillion at year end, up 21% year over year. No real surprise there. It's a good year for the market. It's a good year for client assets. I haven't looked at what, obviously, this market just opened here, so I haven't looked at what the stock has done since the open. But last I checked, it was in the red, and it still is in the red. Okay, down 6% today. I think we have a Schwab chart somewhere.
We do. It's
Maybe
there.
not.
I just saw it.
Okay.
Big base, that Schwab, man. 20-year base. Down 6% this morning.
Look, man, there aren't many games in town for the the broker dealer industry has had a ton of consolidation in the last decade, and really there's Schwab and there's Interactive Brokers, and really Schwab is.
What about Fidelity? Fidelity, isn't the Fidelity the biggest?
They're not. I mean publicly traded. Sorry, that's what I was.
Got it. So Fidelity is just a private company. Was Fidelity ever public? They've always been private.
Yes.
Who owns it?
The Johnson family.
Really? There's a family called the Johnsons, and they're Massachusetts folks. Obviously, Boston.
Yep.
I love how you know that.
I mean, I've read some books, not on Fidelity, but on Wall Street stuff, and it just kind of comes out.
I like it. I like it.
Schwab and IBKR, which was also down this morning, their EPS came in a little bit light. Their revenues came in line, they're a smidge higher actually than the estimate. Customer accounts up 23% year over year to 2.56 million. Slightly business than Schwab. I mean, similar to Schwab at this point is probably more of an asset manager than anything else. Interactive Brokers is really a true broker dealer in the sense. I'm sure Steve has thoughts on that, but
they're actually no longer a dealer.
Oh, they're not?
It's been about 10 years, but
well,
everything you're saying would have been true.
All right.
Yeah,
fine.
So it's actually a cool story. Investors hate uncertainty, and they also
we've discussed this actually. Yes, that's right. Yeah.
You don't want to hear it. Fine.
No, I do. But I remember.
Tell me about how investors hate uncertainty, and tell me about all those certain times.
So, Interactive Brokers back in the day had two businesses. They had the brokerage side of things. They had the market making side of things. It was called Timber Hill Securities. I did all the auditing on the market making side. Market making earnings would come in very volatile. In good times, up huge. It would, drive their beats for the whole company. But in bad times, they could get killed. The flash crash of 2011, the board of directors and I think some of the largest investors said, forget it. We don't want to be in market making anymore because market making lost so much money. Brokers would just come in steady every quarter, right? So the investor said, we don't want to deal with that uncertainty anymore. Get rid of it, spin it off, goodbye, just the brokerage. So daily average revenue trades, DARTs, you see anything on that? That's the metric that matters for these guys.
Didn't see. I'm sure it's out there. I just didn't see it. A couple more things on my list here. You guys mentioned Tesla earlier. Tesla just announced some price cuts overseas, price cuts in Europe.
How low can they go? How low can they go? How much can they cut?
I don't know if they have done price cuts overseas yet. So in Germany, Model Y went from costing about 5,400. Well, no, sorry. The current price is around $5,400 or 5,000 euros. That's the new price. In China, they cut the entry level Model 3 by about 6%. And so, if you're wondering, why is NIO down 10% today, or XPEV, or I guess now it's only 6%, but it's because of that. So
apparently there were similar cuts in China. NIO is just like, wow, what a breakdown. I think we were shorting this one.
Wow, NIO.
Look at that breakdown. Schwab, really ugly reaction. Not sure what exactly it is, but I mean, this is Schwab down 7%. No bueno. Interactive climbing back. Just flipped green. Can't wait to go listen to that call after this.
I know, me too, man.
Shut up.
Hey, keeping an eye on Spirit Airlines here. Testing those COVID lows, like I said, $6. That's the level. So
Testing the COVID low.
testing
Yeah,
the COVID low.
in the who gives a fuck stat of the week. Anyway, on to real companies. Dow Jones Industrial Average down 130 points this morning, about 34 basis points. S&P's down 36 handles, down about 70 basis points. NASDAQ 100 futures down 1.2%, 200 points as bonds continue lower with equities. Gold basically flat, silver down 1%, copper flat, oil down 1.5%, natural gas down as usual, and dollar inching slightly higher here with the volatility index up above 15. Wow, that's the highest VIX we've seen in a minute as yields on the 10-year hanging around right around 1.4%. And then finally in the old funny money, what are we looking at? We're looking at Bitcoin down 1.7% to about 42,400. Ethereum hanging out right around down almost 2%, just above 2,500. And Solana hanging in there just fine, down up to 2.3%, right around 100.
I have a chart. on that. We could talk about it at recess.
Can I interest anybody in the Kentucky Derby? Anyone care about the flows into these like 10 Bitcoin ETFs and who's winning in the first?
Hold on, did you just call it the Kentucky Derby?
I did not come up with that. I
looked at some of this yesterday.
That's pretty funny. Whoever came up with that, that's pretty funny. I know funny. That's funny.
The flows have been overwhelmingly bullish.
Is that who came up with that? Who do we give the credit to? Not Spencer Israel.
I think somebody in Bloomberg, probably. Yeah.
Oh.
Anyway,
a lot of shout outs for Bloomberg.
Yeah, iShares through 3 days, $710 million of inflows. Fidelity's FBTC has $524 million in inflows, and Bitwise is number 3 with $305 million. GBTC after 3 days, $1.17 billion of outflows, to be expected.
They are hoping that they somehow get bought, but I don't see how they make it through this. Would be shocking, right?
Yeah. Yep. It was always going to be there was always going to be outflows there. They were the only game in town for years, and now there are options, lower cost options at that. So, and
here's the thing: they saw this coming from a mile away. So if they haven't been planning for it and have some sort of an idea of like how they pivot, to something else, I'd be amazed. But still, I don't know what that plan could be. And if all the money's leaving, then there's nothing to sell. I don't know.
Yep.
Also, it just seems like the flows have been overwhelmingly bullish, right? Like the size seems to be surprising a lot of people. Like we knew once this institutional buy-in happened that this would be big and money would flow to it, but it seems like some people are surprised at just how big these inflows have been. Is that fair?
Well, what is the over under? You guys follow this stuff more than me. What is the over under on how long it takes to get the Ethereum ETF?
MSTR is a stock, so there's no outflows. It's not a fund.
I don't know if I have the most informed opinion on that. I would hope within 12 months, but I really don't know.
For what? What was the question, sir?
Ethereum ETF. 12
over
months?
under 4.5 months. Dan says. I think that's a pretty good. Dan Marchese.
Q3, maybe even late Q2.
I'm the most conservative.
4.5 months would be late Q2.
Wait, 4.5 months. Yeah. Okay.
Sometime in the summer,
like late summer.
You think these people are going to be working in the summer?
Dude, they're going to be able to put this out really easily. The relationship with Coinbase is there for BlackRock. They're ready to go. They've already done the filings for Bitcoin. They go back. They do a.
All right. I like this. I like this.
Done.
Dan nailed it. That's the over under 4.5 months from today. So let's call it.
I'd say over.
So 4.5 months. What are we talking? Is that June 1st? Just call it June 1st.
This
that
thing
right?
could be out. This thing could be out next month if BlackRock,
So you're taking the under.
no.
June 1st is the over/under. Spencer taking the over, the
I'm
under.
taking the over. I'm taking the
I'm
over.
taking
for
the
sure.
over too. Taking the over. You're taking the over too, Strazza?
Yeah, but I think a lot of people are saying like this is a 2025 thing. I think it's like summer, late summer. I would be pretty surprised, especially now you're seeing the success from these launches, right? So it's definitely coming. It is not a question of if, it's when.
Yeah,
I don't
Dan,
know
you
why
said a
they
great
wouldn't-
line. You said a great line, Dan. Well done. Well done.
All right. We got Mary here lurking backstage. We can bring her on. I'm trying to look. Was there anything on the hot corner that was
No,
noteworthy today?
we're gonna skip hot corner today. Let's bring Mary on. She's got some great stocks she wants to talk about.
I like how Strazza already knows what she's going to talk about.
We talk, bro.
You guys are in cahoots.
We
They
talk.
are.
In cahoots.
They are in cahoots.
Good morning.
So, Mary?
How's it going?
Mary, just living the dream. Michigan winning the national championship. Detroit winning playoff games. Ain't that something?
I mean, it's great to be a Michigander right now. So, yeah, it's still football season for me. I'm sorry, JC, it's not for you anymore.
Oh, it's basketball season for me. That's okay. That's
Oh.
okay. I like basketball season, you know? I'm into it.
Good one, Mary.
Thanks. Spencer dropped off. I was going to, say something about his hair getting all pretty for New York next week.
You can come back, Spencer. You look really good.
You're looking good.
Oh. Hey, I was
Spencer, you
hoping
look
nobody
so
would notice.
pretty, Spencer.
pretty.
So pretty.
The first thing
Oh,
I
I
said
also-
to him this morning.
It-
Great
it
work on
wasn't-
the beard.
It wasn't for you guys. I have a wedding on Friday.
Ouch.
No, but it was also for you
Wow.
guys. It was also for you.
Ouch. Low blow.
Mary, talk to
Yeah.
me about Mara.
Oh, yes, of course. I'm back with my crypto charts.
Junkie.
So, yeah, okay. So here's the situation with crypto, with Mara. This is one that I've been holding for quite a while. I got in about a year ago, really. Started building a position. I've talked about this multiple times. Sold some in December just because, had a bunch of gains and was going to capture some of those gains. And, the trade had worked, but held on to some. And now I'm looking to buy back in. And so now I'm watching this chart. I'm watching Bitcoin, and I'm looking for another opportunity to continue to add to what I started. We've drawn and talked about this level 1920 tons of times. So, that's obviously a place that is going to have a lot of interest, especially if we start to push through that with some, gusto. I still think the Bitcoin chart looks good. We had the Sell the News event, and I still think for a long-term investing, and that's how I view Bitcoin and these miners as a long-term investment, I think there's still a ton of runway. What I talk about often is dropping the WAP. And so if you put an anchored VWAP from the high in December, you drop another WAP from the low in October. We're trading right around that level. And so that's an area of interest that I'm watching. Haven't done anything yet, but it's on my radar, and I'm looking to buy back in and, hope take it for the next leg.
So encouraging that this retest came right back down to these VWAPs, but also just our risk level.
Exactly.
The price memory here from the August highs and the summer highs from last year is very strong, right? And we're seeing that. Let me just look at what it's doing right now here today. If we get strength now back through this level, I think that's a beautiful entry, right?
Yep.
So 1920 was our initial entry level. I think, you just jump it here, you use 19 and then buy strength, right? Don't go buying here at 1775. We don't know what's going to happen back in this penalty box, but strength back out of here. Then we look back at this and say, textbook retest. Wow, what a gift for bulls who maybe missed the initial breakout. I didn't touch the initial breakout. Wrote the post. Didn't touch it though, because I missed it, right? So I'm not going to chase this. It exploded, right, when it took out this level last time. So now it came right back to me. Strength above 19. I'm in.
Same. Yep, same.
So,
yeah.
I do worry. I have a chart here. I'm trying to mark up. I do worry that we are entering. So I hate to get all fundamental on a chart that's this clean, but I do worry a little bit that we're entering maybe a new phase of the crypto bull. Fonz just dropped a chart in the chat where Bitcoin stops outperforming. As long as it participates, right, and continues to trend higher, the miners should do well. But I don't think you're going to get that leadership from Bitcoin going forward. I would be very surprised.
New multi-month lows today for the record in Bitcoin dominance.
Right.
Lowest level since October.
That's the one thing I think, and I'm probably overthinking it, but I do worry. I say, I don't know if Bitcoin's the best vehicle. This is a Bitcoin derivative play.
What are you worried about? Well, what are you worried about?
We're talking about buying Mara.
Oh, right. So specifically for Mara, because when you look at cycles, like Bitcoin leading off the bottom and then rotation into the alts.
Right.
So what you're saying is that Mara, if Bitcoin's underperforming, Mara might not be the best vehicle.
Yeah, and instead of
that's not fundamental though. That's the behavior of the market. That's a legit question.
But it's both. It's also fundamental.
What's fundamental about that?
They make money off of mining Bitcoin. That's what they do.
Yeah, I think you're overthinking it. Remember, Marathon was moving when Bitcoin wasn't, and then Bitcoin was ripping and Marathon wasn't. Like,
again, I like the cryptos here. This is a vehicle that's been working. I want to be involved. Gonna take a shot. But if something goes wrong, I wouldn't be surprised if I look back and say, Bitcoin kind of lagging here. Miners didn't get the price for spot Bitcoin that they needed to, break even or be profitable, and that's a risk here. That's all.
The risk versus reward is interesting. It doesn't necessarily mean that we're just going to bounce off here and rip. It could be kind of like a little scoopy, kind of iron out a little bit of a bottom over a few days or even a few weeks. It could be one of those.
In fact, this is one of those technical concepts that they teach in the textbook, and it's what I call technical theory. It's similar to economic theory. They teach technical analysis in a certain way, and then you get out and you practice it in the real world, and it always looks very different. When you get textbook retests like this, it's very rare that it's just touch and go. And that was like a great entry. It's very rare. Like JC says, they come back, they dance around a little bit, they fall back into the box, they shake higher, they shake back in. You get stopped out 2 or 3 times, and then it finally goes.
I think we can all agree that if Marathon is below 19, you can't own it.
Throw up the Solana chart. I think, for the crypto.
Right? Would you agree with that?
100%. We were just saying that when you were.
I would even pay more. I would say even 21. Like, I really want to see this thing moving higher versus trying to get cute and buy cheap. And if you do want to get cute and buy cheap, maybe initiating positions and adding to positions that as they break out might be an interesting strategy there as well.
Flip back to it. We get to buy on strength, which
go back to the Mara.
Yeah. This is what we call a confluence of potential support, right? All these VWAPs coming in, right? Right below price. We have this huge polarity zone right here at 19. I think we should stop talking about it because we're moving the market. It's turning green here on the day.
You ain't moving markets.
Small
not
stop.
Not with that shirt.
Solana. Let's talk about crypto real quick, and then Mary's going to talk to us about 2 more names she likes. Solana, this is the top dog right now. This is the one I'm watching. Been correcting since December. Nice little coil. Dropped the VWAP from the December highs on these altcoins. When those go, that's your entry. That's it. It's simple as that. If you want to know when is a new leg coming for crypto, for the altcoins, maybe right now, right? There's got this nice little coil. You got the VWAP from those pivot highs. That's how I'm doing it. That's how all of my altcoin charts look right now. Ethereum broke its like a day or 2 ago, started moving higher again. As we see more and more of that happen, I think Solana will be a big one. Then we probably are getting a new leg up in crypto markets. Talk to me about Datadog.
Yeah, sure. Okay, so Datadog. This comes to us from our junior Hall of Famer scan from All Star Charts Premium. And
already a junior, this one.
What's that?
It's already a junior, this name, just.
So what does Datadog actually do? I can't.
It's a cool name, though.
Yeah.
Software.
Right, but I mean, what specifically? Anyone know?
Cloud scale applications, monitoring of servers, databases, tools and services, SaaS-based data analytics platform. The mascot is a dog named Bits.
Interesting.
Wow.
Yeah, it's just I've heard the name a number of times, and as I was preparing to bring this on today, I realized I don't actually know what they do.
This is one of those IPOs that came out, right? That period that Spencer's still traumatized about.
No. Before then, this was an early mover. A lot of good ones came out in 18, 19. Yeah, this one was 19. So
this one, oh, go ahead.
Pre-COVID. Go ahead.
Okay. Yeah. So this one from our Junior Hall of Famers, what I like about this one, we've got a nice rounding base that looks to be completing. We've got, if you had the 200 on here, you've got the 200 curling higher, indicating that we're moving. The trend is now up higher. So, with this one, 116-ish, 120-ish, there's kind of a zone in there. I think if we're trading above that, you got to be long. So this is one that I'm in, just got in, and hoping that it cooperates and pushes higher.
Again, similar to Mara, there's a theme here with these charts that Mary's bringing us. So clean, clear as day, where you're in, where you're at. Spencer on Spaces yesterday made this point. I think he was talking about next gen energy. Spencer, why do you like that one? It's clean. I know where I'm wrong. I know where I'm at.
Exactly.
Datadog is that way. Mara is that way. I really like this. If you were to zoom out on this, we have, I think it's like 2019 or 2020 highs. Yeah, you got 2020 highs at the same, 120 level. Great chart. Beautiful base. I think you play this one back to those old highs. This is one of those really popular stocks with a beautiful growth story that the fundamental folks really, really like to talk about. So I always feel good when my smart fundamental friends like one, and then I look at the chart and I say, ooh, new uptrend. Okay, great. Checks both boxes.
I'd rather them hate it. I like it when the fundamentals don't make sense and the stock's ripping while these fundamental people are very confused.
And
I'd rather have that kind of tailwind.
Okay, maybe. And this next one of those fundamental folks that I'm talking about likes a lot. Mr. Warren Buffett himself owns, I think, 4 or 5%. This is STNE.
Closet technician.
Yes. So this one from one of my favorite scans, I talk about the scan all the time, the 2 to 100 club. I oftentimes, when I'm looking to trade, I often go into rangefinder and I just search 2 to 100 because I just love fishing in this pond, just because these are the next, I trade ideas or stocks that we think are going to be the next big ones. And so Stone Company, again, we've got kind of a nice base that's formed, and this software stock that I think if we're above 1750, which we're trading at about right now, you can be long. And if you anchor a volume-weighted VWAP from the all-time highs back from February 21, that comes in at about 1750. And so you've got kind of that confluence of areas that are of interest, and I just got into this one yesterday as well. So I'm long, and fingers crossed.
I like it. I like the way it's been behaving over the ultra short term. Nice candle yesterday. I think it's trying to resolve this little continuation pattern that formed after the base. I am buying DraftKings calls right now.
I really like having Mary on here because there's nobody on the planet that consumes more. I like having Mary on here for a variety of reasons, to be fair, Mary. But
Thank you.
There's nobody on the planet that consumes more of the All-Star Charts content than Mary. So it's really fascinating to watch you sort of pick this one versus that one, and kind of what stands out to you, because, we're a little bit jaded around here, right?
Well, and it's been tricky the last week or two. Just, I've kind of been sitting on my hands a lot more, watching the dollar a lot more, just kind of waiting to see kind of how things shake out after the huge move that we had here at the end of the year. Been a little bit more quiet, but still making trades, and you guys are still putting out great information. I'm still making money, so it's win-win all around.
What was your best trade of 2023?
Mara.
That was your best trade?
Nice.
Yeah.
I gotta go back and look. That may have been my best trade too. Tesla and Meta were two monsters for us also. Caterpillar, if you recall, was another big one.
Yeah.
But Mara, I think maybe.
And I was in Mara and coin. So
I had the 20s and the 30 calls. So I was in pretty big.
DraftKings has been a big winner for me. I got into that really early. Shopify, another big winner that I'm still in just because I like it long term. So last year was a great year, quite frankly.
What was your best trade last year? Coinbase or Uber, Strazza?
Coinbase. Equities, Coinbase. Definitely.
Solana in the crypto?
Yeah. Listen, last year was great. This year's been a rough start. Start this year.
Watching Key Corp still. They've got their earnings tomorrow, right?
Yeah.
All right.
Yeah,
Why don't you get that bumper there, Spencer?
Yeah, let's do some recess.
All right, Mary, what do you got?
Well, so my kids have been back to school now 8 days from Christmas break, and they've been home 3 of them, courtesy of the snow and the cold. So they're actually home today, and I'm surprised there has not been a crisis during this segment, quite frankly.
We appreciate it.
No, it's all good. So we're
gosh.
cold. We're, buried under snow, freezing our tushes off.
Michigan winners, man. Nothing like them. My recess is happy 68th anniversary to the Ford IPO, which IPO'd on this day
What
in
year?
1956. Did I? Yeah, I think so. 1956.
What took them so long to go public, you think?
Well, they were probably never going to go public when Henry Ford was alive, and he died in the 40s. So.
And why is that? Why he was anti public trading?
I don't know. A lot of founders probably don't like selling out, right?
Also a different market.
Keep it in the family a little bit. Anyway,
I was going to say it's a very family-based company.
Ford IPO'd at a price of $64.50. That gave it a market cap of about $660 million.
Hilarious.
Today, obviously, it's $45 billion. So
is that what that converts to?
Yes.
Wow.
Ford, great American brand. I'm a supporter.
I hope it goes to 0.
So JC says it is now basketball season. So let's talk about basketball. My UConn Huskies, where I went to school, long time ago, they win a lot of national championships. Back in the #1 spot. Probably going to stay there. Win another championship, but we'll see. Let's go UConn. They play, I think, Creighton tonight.
Yeah, first time in like 15 years that they've been #1 in the country, which is remarkable because they won 3 titles during that time. So
we like to be dogs.
Yeah. Very interesting. All right.
I don't think that white wine is for cooking, like many people have been telling me for many, many years. I think there's a time and a place for white wine, and I'm ordering our wine for Tuesday. I was actually looking at the menu, Spencer. Tuesday night for dinner, and we're going to order some champagne, and we got a nice white Burgundy, a little pricey, but we'll be fine. And it's the wine menu is leaning French, which I don't have a problem with. It's leaning French, leaning a little too French for me. I'm not going to lie.
Wow.
The lack of Italian, but
are you saying the menu is not your selection?
Oh, the wine list.
Okay.
It's leaning a little too French for me.
I
love French wine. I wanted to get a little Italian in there because I'm not drinking Italian wine at home these days. I'm making a New Year's resolution.
See the
I thought
wine.
that's all you had been drinking.
I know I'm not doing very well. It's all I've been drinking.
The wine meeting is not a meeting where JC needs help. The food meeting, though, you needed a little help. I told Alfonso that we had settled on the duck. He was ecstatic.
Yeah, we got the duck, we got the steak, and I guess like we did some vegetarian decisions. Like we were ordering way too much seafood for appetizer, and I got some pushback.
We did the right thing.
We're gonna watch. We're gonna show up there. There's gonna be no vegetarians. I'm gonna be like,
doesn't matter. All right.
We X'd the salads.
No.
Well, also Joe said the salads were underwhelming, so there was that. We were influenced because I love a good salad, but he's like, nah, skip the salad, go to the tuna. I'm like, now we're talking.
All right.
Just promise me there will be pizza and there will be bagels. I need New York pizza. Well,
not that night, but yes.
But during the course.
I think we might go out for pizza Wednesday night, and I will make sure there are bagels at some point one morning.
Yeah, remember there's unions in New York City, so we got to deal with the communists. So we can't bring in just random bagels from random places. Like there are rules.
I will smuggle bagels.
We're gonna smuggle some bagels. Not even kidding. I'm with Strazza on that one.
Those of you in our portfolio accelerator program, we will see you in an hour for our weekly analyst meeting. The rest of you have a great day. Go make some money, and we'll see you later.
Adios.
Bye, everyone.
Where's my bumper?
Let's try that again.
Run it. I can't take no loss. I don't even know what it costs.